Hi, my name is Alessandro Cava, and this is the Stock Table. I hope you had a blessed holiday season, and you're ready to get back out there and buy for the future. The Dow Jones Industrial Average went up 25% in 2017 and looks to continue the bull market into 2018. Today, we will be doing a review on a stock that we talked about in June of last year, MICRON Technology. They make semiconductors of many types, including dynamic random access memory, which is DRAM, flash memory, and solid-state drives. This stock was at $31 a share in June when I issued a buy rating. They are now at $41 a share. Although this stock is up 87% year to date, they have huge upside and are very undervalued. First, let's examine the fundamentals of this company. They have a price-to-earnings ratio of 6, which is extremely low, especially for a stock that has nearly doubled in the last year. Micron is in a very good business also. The DRAM industry is booming, and they hold a 21% market share, which increased from an 18% market share a year ago in that sector. They also have a 12.9% market share in the NAND flash industry. Samsung is the leader in both of these industries. However, Micron is growing and continues to take a small percent of their market. A year ago, Samsung held a 50% market share in the DRAM industry, and they currently have a 45% market share. Micron's profit is jaw-dropping. In quarter 1 of 2017, Micron had a net income of $180 million. That number increased to $890 million in the next quarter. Now, fast forward 2 more quarters, and that number is $2.68 billion. Yeah, you heard me right. With an earnings per share of $2.36, which has increased from 17 cents a year ago. You talk about improvement. Wow. A big reason for this was in July they announced their acquisition of Elpida Memory for $2.5 billion. This company was made up of 3 of the larger semiconductor companies in Japan, which is the main reason they saw such an increase in market share. Micron is a buy going into the new year. Buy now. Buy for the future. Have a great day. Okay, so here are 2 charts brought to you by TradingView for Micron Technology, ticker symbol MU. Now the bottom one here is RSI, Relative Strength Index, and the top one is price per share. So let's go back to a year ago when the stock price was at $22 a share and the correlating RSI was at 60. Now 60 is slightly high RSI. It's not overpriced, but it's a little bit higher than where you want it to be. Now, let's fast forward to a year later when the stock price is at $46.88 a share and the correlating RSI is at 60 again. So like I said, that's not overpriced. You may see the stock stumble in the next few days, but we're looking at long-term growth here. So we're going to look at a little bit more of a fundamental view, and the price-to-earnings ratio of this stock is very low at 6, which is extremely low, 6 times earnings. But some people may worry, why is this only at 6? That's pretty low. But it's because they are in the DRAM industry, and the DRAM industry shows wavering sometimes, some volatility with their supply and demand. And this is because there's such a demand in this industry that sometimes the factories can't keep up with that demand. But with Micron's purchase of Elpida Memory, they maybe can keep up with that a little bit better. When you can keep supply tight, their stock price should increase greatly over the next few years. This is a great company. This is a buy. Micron is a buy.